Hello, everybody, and welcome to VRIC Media, the most trusted voice in junior mining. Our flagship event, the Vancouver Resource Investment Conference, is coming up January 19th and 20th at the Vancouver Convention Center. We're going to have a ton of incredible keynote speakers, CEOs of mining companies there, so you can ask them your questions personally. And best of all, it is absolutely free to attend. So go ahead and click the link in the description below to get your tickets today. Of course, in the meantime, we are bringing the VRIC to you with our series of expert online panels, and I'm very excited this time around to welcome Mario Innecco of the Innecco 64 YouTube channel back to this show. We're going to be discussing gold and silver, of course, the collapse of the German government, the commodities complex as a whole, and so much more. Mario, it's great to have you back on the show.
Oh, thank you, Jesse. It's nice to be back.
So I want to get started with a broader question because I interviewed you recently on my channel, but it's been a while since you've been here on the VRIC channel. And I wonder, what are the main themes and trends you're currently paying attention to when it comes to markets and the economy that you think investors should be aware of or that they should be more focused on? And you can take this anywhere you'd like.
Yeah, market-wise, one of the things I'm really looking at right now is the bond market. And I know the bond market is a market that's not really followed too much by the general public, but I think is the most important market because it determines the price of credit. Or money, if you want to call it. And ever since the Fed cut rates unexpectedly, really, not that they cut, but the amount that they cut back on September 18th by 50 basis points, the 10-year yield has gone up from 3.6 to around almost 4.5 right now as we speak. And that usually doesn't happen. So it says to me that the bond market and a lot of people think the bond markets are like the smart money. They're saying that the Fed made a mistake. So I'm looking at that because if that 10-year yield continues to creep up past 4.5 towards 4.75, look out for all the other markets. Would it hurt gold? Because some people think that a higher real rate on treasuries would hurt gold. I don't think so because that relationship has kind of been broken. And with that, I'll jump to the next reason. Next theme, I think, is one of the reasons why this relationship has been broken is central bank buying. Not just from Asia and emerging markets. Now we're seeing like in Eastern Europe. Poland, I think, is the biggest buyer of gold this year in the world, the Polish central bank. And I think that's going to continue because the world sees that the reserve currency that we have, which is actually historically, it's the only reserve currency that is debt-based, which means you never get paid as a country if you have U.S. Treasuries and you go to the U.S. Treasury, let's say as Poland, and you ask for payment, they can't pay you. They just say, "Well, buy some more treasuries." That's how they pay you. When there's a proper monetary system, you go to the treasury and you get payment in gold. So I think the world sees that. We saw, I think, a year or so ago. I don't know if you remember, one of the central bankers from the Netherlands said that gold is the ultimate asset that is safe when everything goes wrong. So I think that's what the rest of the world is realizing, except ourselves in the West in general, that yeah, the dollar is not fit for purpose, and that's why it's going to keep driving gold demand. So those are two of the things I'm focusing on. One, of course, the interest rates and yields are more short term. I think the gold fundamentals are going to keep going. I think that's not going to stop the record gold buying.
Well, we've seen a lot of nations start to divest themselves of US treasuries, Russia and China obviously being the two big ones. And as you mentioned, we're seeing central banks pivot to gold as a more secure, safe haven asset. as government debt continues to increase, government spending continues to increase, which I think is going to happen. Obviously, looking at the US specifically, but the same holds true for governments around the world, they're going to need to print money. They're going to need to sell treasuries to just pay the interest rate on their previous debts. Obviously, this is a big Ponzi scheme. The question always is when it will actually collapse, which nobody knows. What do you make of this scenario going on with treasuries, them being sold off, replaced by gold and reserves? And could we see a situation in the future where there's not enough bids on these treasuries to actually get them into the market?
I remember some years ago there was a German bond auction that failed, and an auction fails when the bid to cover ratio is below one. I mean, I think right now U.S. Treasury auctions are they don't have any problems, but I don't think we'll ever see one of these auctions fail. And why do I say that? Is it because I think the treasury market is solid and it's good to buy treasuries? No, it's just because I don't think the powers that be would allow that to happen. They would come in and intervene, and the Treasury and the Fed would come in through their agents, and by agents I mean Wall Street houses, and make sure that the bid cover is above one. Right now, I think I don't follow auctions that much anymore. I used to when I worked in the city, but it's probably above two to one. Uh, but all that will do is going to continue to show that the dollar, the fiat dollar, is going to become more and more debased. And that's the flip side of it. But who knows? It's possible, though, that they one day there's a big treasury auction, let's say of 10-year notes, and unexpectedly no one shows up, especially foreigners. And even the Fed and the Treasury and their agents are not able to deal with it. It's possible. Yeah, and that would be like I think there's a movie from the early 80s called Rollover, because that's basically what the Treasury is doing every time it sells or issues bonds. It's rolling over old debt because I don't think I was alive the last time the US Treasury ran a real surplus and paid down debt.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly, Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, US Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
You recently released a video on your YouTube channel called Inflation Waves and Why Gold's Breakout History is Pointing to Much Higher Prices. Could you walk us through your thesis there?
Well, the waves, I mean, I have to thank people like Tavi Costa. They've been looking at that for the last year or two. And the theory is that when you see higher prices like we've been seeing since COVID in 2020, mainly because of all the money printing and the fact that this money printing went this time not to the bond market. Well, it went partly to the bond market, but it also went straight into people's pockets, and people at the same time didn't have to work. Was they stayed at home. But historically, they come in waves. You have the first wave, second, and third. And I've just looked historically as well. It looks like in the 30s, even though we're told it was the Great Depression, we had deflation. Even then, we had inflationary waves. And if you read Benjamin Roth's Great Depression Diaries, which is a really good book. They were concerned about inflation in the 30s. So it's like nature. If you th throw a pebble on a lake, it makes waves, and it's more than one. And I think it's the same thing with money and currency and credit. And I think the fact that gold is broken out, well, it broke out really in February this year through that 2100, and it's kept going. Gold is usually like a forecaster of things. It feels it before everyone or the markets do. So I think that's what it's pointing to. And as for the the gold market being still early days, uh, I also have to thank Incrementum AG. They've done a really good comparison of like the second leg of gold bull markets that we've had since the 70s. And if you plot the current one, which we could say started breaking out, that's the second leg. You had 2002 to 2011. That was the first leg, and then we had a consolidation basically since 2011 to 2024. Uh, yeah, it's saying that we still have a long way to go compared to the other second legs, and in terms of time and price. So that's the way I see it. And with the fundamentals as they are, I think the risk is not having enough gold or silver for that matter.
I had Henrik Zeberg on my show, Commodity Culture. The episode's actually going to be out tomorrow, the day after this one. And it should be noted that he is a shorter term trader. He doesn't appear to be a buy and hold type of investor. He focuses a lot on technical analysis, but he believes that we're going to see that we are currently in perhaps the mother of all bubbles in the broad market in all of history. And when that eventually bursts after a blow off top, that we're going to see a massive deflationary bust that's going to affect pretty much all asset categories, gold and silver included. And he believes now is not the time that you want to be holding gold and silver. You want to wait for that event to play out, and then you'll get much cheaper prices. And then he sees the gold price going parabolic, very, very high following that. I know you look at gold as money, and so you're not interested in jumping in and out of trades, but I wonder what your thoughts are on his overall thesis for the broad markets and precious metals.
Well, I see that he was calling like last year for gold to drop back to 1500. So he was wrong on that. And I don't like to brag, but that's a fact. In terms of a major deflationary collapse, what would happen in a major deflationary collapse and bust? And I agree with him. This is the mother of all bubbles, and it could go into a cracker boom. Um, but if you do have a major deflationary collapse or bust like we had in the 1930s, what we're going to see is bankruptcies everywhere. Not just, I think governments will go bankrupt, corporations, individuals, local governments, banks will go bankrupt. So, and if you hold cash in these banks or brokers or institutions, you're going to lose everything. So physical gold outside the system is going to go unobtainium. So that's why I dis where I differ with him. I agree there could be a bust and a collapse, but you don't want to give up real money just when that's happening. You're going to be wiped out. That's the way I see it. And yes, the price on COMEX or paper gold might go down to 1500, and when the Dow is down to 5000, even that though is good. But what I think is the counterparty risk. That's going that's going to destroy people's finances completely, and that's what happened in the 30s. And if you had gold in the 30s, you'd be laughing. And even during the 30s, home stake mining, I'm sure you know about this. went up like 500%. And the more things got worse, the more people wanted gold. And actually, the gold price was trading in Europe even after FDR banned gold ownership. The dollar started going down versus gold even before the revaluation in 1934 because people wanted gold. I read as well in Benjamin Roth's diary that in Australia there was a gold boom because people couldn't get cash from the bank because all the banks were failing. So I don't agree with that. I think it's a big mistake, and he might be right in the short term. Maybe when everything starts collapsing, gold will correct a bit. But it's the biggest risk, I think, is getting rid of, yeah, something that has no counterparty risk, and you don't want to have counterparty risk in the biggest deflationary bust ever, because I agree with him uh, that this is the biggest everything bubble ever.
We've seen a couple of smaller bank failures in the US, the Heartland Tri-State Bank, another bank in Lindsay, Oklahoma. Um, I'm wondering if you've been following those stories and what you see right now when it comes to the health of the banking sector as a whole in the US, because you said in that scenario of a deflationary bust, you don't want to be having too much cash in the banks.
Yeah, that's right. I've heard about the Lindsay National Bank in Oklahoma, and I spoke to Andy Schechtman from Miles Franklin the other day, and he said they did a bail in there, and no one's talking about it, and probably because it was such a small bank. The biggest thing to watch again, and it goes back to what I said in the beginning, watch the bond market because most banks hold bonds as yeah, as an asset. So if you go in there to your bank and put $1,000 in the bank, they'll take that and buy treasuries or commercial real estate with it. And if interest rates are going up, the value of all those loans are going to go down because it means instead of lending at 7%, let's say if yields continue to go higher, they're only lending at 4 or even 2 or 3 from like a few years ago. So yeah, it's really important to keep an eye on those FDIC quarterly reports. And I'm sure you've seen that chart. It looks horrible, even compared to '08. So yeah, that's another problem. The banks, I don't think they're out of the woods. And I think the BTFP, which is the program the Fed rolled out last March 2023 to kind of stop the bleeding after SVB collapse. They've that's almost back to zero, and they're not going to start it again. So yeah, it's the banks are yeah, they're I don't think anywhere near as healthy as maybe we'd be told by like Jay Powell, for example. And I think Warren Buffett knows this because he's been unloading a lot of Bank of America uh, shares, and he's got 325 billion in cash. And I wonder where he's keeping that, if he's keeping that at JP Morgan or who knows? He might want to buy a warehouse to put all the real cash in there. I think they did that in Switzerland when the Swiss cut rates to negative. People, some financial institutions were actually taking real cash and storing it themselves because they would lose less money than leaving it in the bank. So yeah, that's my advice to Warren Buffett. Maybe buy a warehouse or maybe think about buying some gold as well.
Yes, I believe Buffett has called gold a useless pet rock in the future, but who knows? Maybe he'll change his tune. That is an interesting point to bring up, though, is that Berkshire Hathaway currently has the largest cash position in its history. And if you followed Warren Buffett's career, if you've read his investor letters, you know that him accumulating this much cash is because he thinks the broad market is probably overvalued. He also divested himself of a lot of his Apple shares in addition to Bank of America. Um, Do you think he has his finger on the pulse more than most, perhaps partially because of connections he has with people behind the scenes, some of these bigger players in the world of finance, banking, and government? Do you think maybe he sees something coming here for the broad market?
Definitely, he's part of the club. You
Yeah.
know, I forgot his name now. He's dead. The comedian. He said,
Oh,
you know,
George Carlin. Yeah.
there's a club and you're not in it.
Yeah.
I think Warren is in it, and he probably has more information than we do. And I think by owning such big chunks of big companies, he gets more. He's closer to the executives in these companies. I'm not saying he's getting inside information. He's just getting more detailed information, and he probably sees things happening while the general public sees these like a few months later. And he definitely has, in my opinion, a lot of connections to, yeah, people, the establishment. Well, he is part of the establishment, I would say.
Yeah, I would say so too. What's going to be done about entitlement spending? This is a topic that, well, it gets brought up, but perhaps not enough. I mean, realistically speaking, for governments like the US, Canada, and the UK to get their financial houses in order, which I think we both think is not going to happen, but entitlement spending needs to be cut. Now, we have seen in the UK them take away heating benefits for certain pensioners. They were subsidizing their heating. Which many have said is incredibly cruel. It could be a cold winter. Maybe these people can't afford it. But taking a step back and looking at it from a purely economic perspective, is that the right thing to do, is to start cutting back on some of this entitlement spending? It's interesting because people work their whole lives and they believe that they're putting money into some kind of fund that then must pay them back. But that's actually not how it works, right?
Yeah, which is a shame because I think most people are told that that's how it works. Like here in the UK, they call it the national insurance. But as you say, it's like when you pay into the national insurance here, that money doesn't go into your account and they don't invest it in gold so that when you turn 66 or whatever, they start paying. They pay the people who are retired now and they probably use the money for other things. They inflate, and the money doesn't is not worth as much. But what I think they'll do with the entitlements, I don't think they're going to cut them in nominal terms, but they'll cut them in real terms. And what does that mean? Well, they're just going to basically fudge the CPI numbers, whatever measures they use to adjust these entitlements every year, and it's going to be a lot lower than the what the currency is being debased by, and that's how they do it. So you might be getting, I don't know, $1,000 from some entitlement. It might go up to 1,500 in 10 years, but that $1,000 is only worth now 500. That's, I think, how they'll do it, because if they try to cut it in like nominally, like people are gonna revolt, and people have been conditioned to think, oh, I've paid it all my life, I should get it. It's going to be like in third world countries where pensions are will become, they still pay you, but it won't be worth much. And yeah, that's how I see it with the entitlements. And I've noticed that Donald Trump, for example, when he was campaigning earlier this year, he said he wouldn't touch the entitlements. But one guy I think that has the right idea is someone who would never legislate for a welfare state, and it's Ron Paul. He said many years ago that it's not fair to cut entitlements of people because he promised it to them. But he said the way to forward is to wean off the younger generations off the idea of the welfare state. So you can tell them, you're going to have to look after yourself. You're going to have to save privately. But the problem with that is that they'd still be paying for the elderly people that need that entitlement. So it's a tough question, and I think the way it will end the problem is going to be solved is going to be through hyperinflation, and that means that your pension will buy you a cup of coffee every month, and that's what happened in Germany and Central Europe in 1923. Some people, I read about this guy. His father put money into like some kind of insurance policy so that he could go to university. And when he came back from the war and the hyperinflation, the money that was supposed to be his university fund was worthless. He could buy lunch with it. I think that's what's going to happen, unfortunately, because it's politically very difficult to cut everything. We're seeing that here in the UK with the winter fuel allowance.
And I know you're a gold and silver guy first. It's your focus, sound money. But when you look around the commodities complex as a whole, do you see any other metals or materials that you think present an attractive value proposition in terms of maybe the equities, whether that's mining shares? Maybe speak about gold and silver mining shares too, if you're involved in that, and any other commodities, uranium, copper, platinum, palladium, anything else that you might be watching at the moment.
Yeah, mining shares I'm definitely interested in. I do have mining shares, mostly the big miners, uh, because I think yeah I have a problem here with my the way I can invest, and I don't have access a lot of times to the smaller mining companies. But yeah, I think if you're into speculation, it's a good thing, and I think they're going to continue. They're still heavily undervalued versus bullion, and yes, I do look at the mining exploration companies, and they are like really speculative, but they can also provide you with a huge upside potential. So the way I structure my investments is that most of it is gold and silver physical, but I do have a good amount in the miners, but an amount that if let's say it all went to zero, it wouldn't like affect me financially. In terms of other metals, yeah, I think copper is undervalued, and I think commodities in general. Um, I think we started a bull market back in 2020. We've been having a bit of a consolidation, and I think when the stock market corrects, I can see a lot of money going into commodities. And the commodity sector is so small compared to all the Magnificent Seven. So even if a fraction of that money went into commodities, that would really put a rocket up the sector. I think, yeah, uranium. I've done promotional videos on my channel about uranium companies, and we've seen that Russia's recently put a stop on the export of enriched uranium to the US. The US uses 20% of its electricity is generated by uh, nuclear reactors. So yeah, it's very important. And I think the Chinese are building a lot of nuclear reactors. So uranium is a good something that I can talk about that I think is a good place to be. And I also think with the way the world is geopolitically divided between the West and the BRICS or Global South, it's going to make commodities a lot more vulnerable to supply chain troubles. And yeah, and just the fact that I also think that the bond markets are in the it's a bear market now. And what do I mean by that? Well, the decrease in interest rates from 1981 to 2020, I think that's over, and we're now going to see the cost of borrowing go up for the next few decades, and that's generally pretty good for commodities because it means yeah, there won't be as much money going into speculative paper assets. So it's going to make commodities more valuable in relative terms. And I think if you look at some relative value charts, like commodities are still right at the bottom of their historical levels, let's say versus Nasdaq and S&P. So I think there's a lot of room on the upside.
And what are your thoughts on the collapse of the German government, the issues they've been having with energy? It seems like a political class hell-bent on a suicide mission, shutting down their nuclear energy capacity, putting in tons of wind and solar in a country that doesn't necessarily have the correct weather environment for those sources of power. As a result, electricity costs skyrocket, Volkswagen shutting down factories, many other companies having to close, a lot of them relocating overseas to more favorable jurisdictions. What happens to the most powerful industrial engine in Europe? How did we get here? And is this a canary in the coal mine for the rest of the EU as well?
Well, I'm going to be a bit conspiratorial here, but World War II ended in 1945, and Germany has been under occupation since then. There's a lot of American forces there, and yes, the German political class is totally like let's say, not the whole political class, because I see they want to ban one of the political parties
Yeah.
that's actually trying to make a stand against this crazy moves in Germany. But so how I think the powers that be, the people who run the dollar system, they don't want a strong Germany that is the economy is healthy and has good relations with Russia and China, because that means that Eurasia, they can't control Eurasia. And I've spoken about this a few times. This this pivot, this geographical pivot of history, which was a theory by Alfred Mackinder over 100 years ago, that he who controls the world island, and the world island is Europe, Asia, and Africa, they have to control the heart of that, which is like Eurasia. And if you have a strong Germany, a strong Russia and China, and they're all trading and happy, they don't have to use the oceans. They can ship things by rail, and I think that's what's going on. And um, un yeah, it's unfortunate because Germany needs the cheap energy from Russia and other places. And now, ever since the war started in Ukraine, that's gone out the door. And we also had the Nord Stream. And it's ironic because even when the Soviet Union was around, West Germany, which was supposedly against the Soviet Union, was part of the West. They actually bought natural gas from the Soviets. So it's really weird. And I think the German people, though, and the German economy will come back eventually, because they always do. I mean, if you could come back from the annihilation of World War II, you can come back from where we are now. So that's what I would say.
Well, Mario, this has been a fantastic conversation. Really appreciate you coming back on the channel. Tell us about the Innecco 64 channel, what it is you do there.
Well, I make regular updates or daily updates on the markets, and about I talk about current affairs and try to link it to history to see how things are going to go forward. Yeah, and I'm the Monaco 64 is the home of alternative economics and contrarian views. And what does that mean? Well, that means that I try to look at things from an Austrian school of economics perspective, instead of the statist Keynesian run economies and philosophy that most people hold today.
Great. Well, I am an avid subscriber of your channel. Always appreciate your content. I will put a link in the description below so people can check it out. Thank you once again, Mario, for coming on the show. It's been a blast.
You're welcome. And thank you for having me again.